Welcome to the Oxen Group Nightly. My name is David Bristow. I'm the CEO, founder, and president of the Oxen Group, and we're excited to bring you back to Oxen Group Nightly. We've been all over the place traveling a little bit lately and have taken a couple days off the Oxen Group Nightly, but we're back. Tonight we're going to be talking about our Tuesday market wrap-up, our position in Dean Foods, our position in Global Payments, our other current positions and exits we had today, an update on equity analytics, as well as our tomorrow's forecast, and disclaimer at the end of the video. If you do want to see disclaimers at the end of the video. Market wrap-up. So today we had another great day in the market despite poor numbers, and this is a trend that's starting to really set forth where we're seeing the market do very, very well, yet not have the real huge catalyst that we would expect as far as positive economic data or company news. And I think today especially there was very little out there that would make you think we were going to rise. I mean, for one thing, we had the Case-Shiller Index showed an over 3% drop in home prices year over year for January. It was better than the 3.3% expectations, but however, housing stocks all declined, so that wasn't the catalyst for today. And then S&P drops. They dropped Portugal's credit rating to one notch above junk status today. So further bringing in worries about Europe, and I mean the European Union has so many worries right now with Portugal's credit rating being dropped. There are still problems in other countries as far as their credit goes, and then Ireland. They just performed all these stress tests on all their banks, and those findings are supposed to be out tomorrow, and no one's expecting those to be very good either, and they're going to show that they're going to need a lot more money to basically stay afloat there as well. And then on top of all this, you had consumer confidence dropping below expectations for March. We had they were supposed to come in at 65 were the expectations for today, and they came in at 63. And you know, the confidence is still good. It's it's not as high as it has been in the past, but you can see that it's well above where it was in the 08, 09, even 2010 area. We did see the drop here, but that isn't, excuse me, right here, this is the total. We saw the drop, but you know, again, this is not a huge drop, bringing it back to normal levels where we've seen it, you know, as of recent. And you have to take into consideration that this number comes out as with the whole Middle Eastern crisis, excuse me, the crisis in Japan, continued crises in European credit, and I think we're seeing the economy sort of, okay, wow, we've been doing really well, we're getting confident, more confident, more confident, more confident, and now I think maybe we've plateaued a little bit on that confidence, and it's going to take, you know, more jobs and continued growth in our companies here in the country in order for that to just buck right back up. And hopefully that will happen in the April season when we start to see some of these quarter one earnings come out. But yet, despite all that, the market rallies. It sank quickly, and I thought we were going to definitely be having a pretty bad day. At 10 a.m., you see what happens. At 10 a.m., the market just rockets right back up, and after that consumer confidence number came out. And the only thing that we could really come up with is basically the market was pricing in very low expectations for consumer confidence, even below expectations from analysts. And at the same time, it was nice to see basically the end of maybe pricing in sort of the risks of, you know, Japan and its effect on America, and basically like we're closing the book on that chapter and we're moving on to a new chapter, and the market rallied throughout the rest of the day. There wasn't a key moment or a key point where you could say, well, that news came out, that's really good. I mean, there were some company news that was somewhat bullish from Amazon, but you know, even oil companies were pretty weak on the day, with Halliburton commenting that they're going to see lower earnings, as well as BP getting a downgrade. So there was a lot of, it was interesting to see the market rally and it be as strong as it was, and even as bullish as I normally am, I was surprised to see how well it did. But we took advantage of it and bought up some things. We got into Dean Foods. Today we took an entry at 10.10. We were looking for 2% and 4% exits on this position. It closed up slightly above where we bought it. And as we're going to show you in a second, the stock hit the bottom of an upward channel today, and we think it should bounce off of it. Technicals look positive, as well as we have a buy rating on Dean Foods in our long-term ratings portfolio analysis. And you can see from the chart right here, we're right here. This is the bottom of this channel that Dean Foods has kind of been following up. You can see the 20-day moving average, as well as the 50-day moving average, have both been following this. Obviously, the 50 coming in lower. Then you see the 20 coming, or this first the 20, then the 50, now the 200. And so what that all is saying is this is making a scoop, and it's going to go right back up here. And when this bottom line crosses this top line right here, that's when this stock is going to fly. It's had that resistance at 1050, and it's needed all this support to make it all the way back up to 1050 in order for that to make it, for Dean Foods to make its way over 1050. That should happen, and we believe that's going to happen. So we bought here. We think that this is definitely going to go to 1050. In the meantime, probably go to 1030, then to 1050, and then we'll see what it can do after that. We'll probably hold on to some of the position to see what it can do after that. This is a very nice chart. This is the kind of chart we're looking at, where you're seeing these different moving averages slowly catch up, and you see the 200-day now slowly here bottoming, going to go up, 20 is going up, 50 is going up, all good. We also bought we also looked at global payments today, and we had a recommended entry on this one at 48, and the stock closed a little bit above that, about 1% at 48.16, and this was a nice position for us to get into. As you see, what we really wanted, what the key was for us. This is the 20-day and this is the 50-day moving averages. And the stock closed above the 50-day moving average, which was key. It started out the day like right there on the 50-day, and it was in this nice, tight, narrow range you can see throughout the last 3 days. Once it broke through here, okay, this was a support line. Wasn't going to go below that, but then it was resistance here. Now it broke through that, so we're expecting this to go up. Now the catalyst for GPN is that they have earnings coming out on Thursday. It's supposed to be better year over year. It's supposed to see 11% sales growth year over year, and so we're expecting to see some more volume come into the stock. And you see it has picked up over the last 3 days. We're expecting that trend to continue into tomorrow and take this one up, where we can get out for a 2 to 3% gain. Also on the day, we entered GameStop, GME, at 22.28 in a midterm trade, looking for 2% and 3% exits. This stock has a lot of momentum and not a lot of resistance up until 23. So we expect to just see that stock continue to go towards that target. They've got a lot of good things going for them, good earnings. That combines with, now that the Nintendo 3DS is out, that's another nice catalyst for more sales for them hardware wise. So they got a number of big games coming out in the next couple months. Everything looks good for this company right now. It's one of our buys and rated our buys as in our long-term ratings portfolio, and we really like this one. We exited another 1/3 of our JA Solar position for 4% gain today at 7.05, and we're still holding another third. We are looking to hold that third throughout the end of the week at least, possibly even longer. Solar is very strong right now. Not a lot of reasons for it to be making its way down. Germany is looking stronger than ever with its recent elections, and this stock has a lot of good momentum behind it. We wouldn't be surprised to see another 4 to 5% added on to the gains it's already made this week by the end of the week. And then finally, we had all this bad news today, so we tried to short oil at the beginning of the day with the buy of Direxion's 3 times oil and gas ETF. You know, that's an ETF that follows oil companies, not oil prices, and we weren't really concerned with oil prices. What we saw was a lot of information coming out about that was pretty weak for oil companies today, with the downgrade from BP, with Halliburton saying we're not going to make as much money, with them probably being a bellwether for all the other oil services, and it looked like, okay, this is probably, and then we got the consumer confidence numbers, and we were like, all right, this looks like a day when we might be able to take a breather. These energy companies, they've been getting a lot of buying, a lot of support. Maybe they're going to take a little bit off. But we were not able to make that happen, as we saw from the chart on the day. Finally, equity analytics. We have completely finished all of our analysis. We're just putting together our report right now. That will be up tonight. We are we are going to finish it tonight. Doesn't care how long it takes us. And some of that has already been available on the website for you to preview. And then price targets will be on there, scoring indices, company profiles. Some more highlights is First Solar is leading our profitability index, while GT Solar, SOLR, leads our financial health index. Tomorrow, market continues to rally on little good news, is recovering off losses, is recovering all our losses from the Japan crisis, and I just don't see a slowdown in sight. I don't know what it's going to take to slow down the market. I think we got a little bit of a push down, and right now everybody's trying to buy. They don't want to miss out on these rallies, and it's very volatile, so you really don't have a lot of the buy and hold kind of strategy in there. It's a lot of traders, it's a lot of active traders, and it's a lot of institutional investors trying to position themselves well into the end of April. With the March ADP employment change numbers coming out tomorrow, if those are even slightly good, I think we'll have another big day in the market. If those are bad, maybe we could see a little bit taken off, but I would say that any drop tomorrow will probably be bought back up because of the Friday unemployment numbers. No major earnings really on the docket. And that's going to do it for us today. Visit us at www.theoxengroup.com. Email us anytime. Call us. Be a part of 70% accuracy. And here's our disclaimer.